how long the Fed has kept interest rates higher, which means how long it has been since its last rate hike and before its first rate cut. We're now above normal, as you can see. This has happened 3 times in a row when prices were higher than they are now. Each time was a sign of the global financial crisis of 2008 to 2009. That was 2006 to 2007. It was an early sign of the tech and telecom bust in 1997 and 1998. And from 1969 to 1970, it was a sign of a coming decline. Cathie Wood says that Bitcoin's issue rate is cut in half every halving event. This helps keep the cryptocurrency's inflation rate stable until the next halving year. The way central banks handle money is very different. When they loosen monetary policy, they make so much more money available that the damage is almost impossible to fix. They do just as much damage, if not more, when they snug up. Cathie is sure that this is what is going on with the U.S. Federal Reserve right now. Rates will stay high for longer until the central bank wins the war on inflation. Cathie says this is a very bad idea that will make things even worse for the stocks and business. The CEO of ARK Invest thinks that if we don't take action right away, we will have another major global financial crisis. As Yassine said, you can see the focus in this halving chart. It has been scientifically metered, and miners and I came up with ideas for Bitcoin. I think Yassine will set that up in a moment. But this policy on money was pretty much written in 5 lines of code. I didn't know that until we talked about Bitcoin. Such a beautiful, simple, and clear design. On the other hand, look at this. Now this is M2 growth, which is a 4-year difference in percent per year. How much money has grown each year from March of this year to March of last year, or from March of this year to March of 4 years ago? The black dashed line shows the last point of data, which is that one. That means the rate is about 8%. In fact, it's probably more like 6%. This chart shows a lot of information. If you look at M2's growth rate over the last 4 years, you'll see that it's all over the place. As you can see, it went up to double digits in the 1960s and 1970s. It reached double digits in the late 1970s and early 1980s. It was hard to move and took a while to get there. Then Chairman Volcker came along, I think it was 1979, and said, we need to get this under control. So he began limiting the money supply, and that trend stayed strong until the mid-1990s. Then, in the mid-1990s, it's very interesting because it's kind of like now. In the mid-1990s, currencies all over the world lost value one after the other. Because our money is the world's reserve asset, our monetary strategy spread all over the world. And Mexico was the first country to devalue, and it was a big one. We were dealing with Mexican stocks, so I remember it very well. Finally, after a few years, there was the Asian domino effect. That was in 1997, I think. After the Thai baht, all of Asia's currencies lost strength. In 1998, Russia ran out of money, and then long-term capital started to fall apart. When monetary policy is so hard to predict, it causes all sorts of bad things to happen in the system. So what do we have now? Because of COVID, we can see what took place. That made the yearly growth in M2 reach 12% over the last 4 years, but now it's slowed down very quickly. In the 1960s and 1970s, there was a sort of acceleration, at least in the sense of a trend, and a stabilization near double digits. But this time, money was thrown at the system to keep it from going into a full-on slump. And if we can keep year-over-year growth at around 0% by the end of the year, this line will drop toward 2% to 3%, which is something we've only seen once. It happened in the 1990s, and then everything went crazy around the world. Cathie says that the Fed's decision to keep interest rates the same is hurting economies that are already weak. Over the past year, at least 3 currencies have lost 40 to 60% of their value against the US dollar. Lucky for us, anyone in any of these countries who can connect to the internet can easily buy insurance in the form of Bitcoin. This has kept millions of people in developing countries from having their paper currencies fall in value over time. Also, economies that have been around for a while are starting to show signs of trouble. Here are some more film clips. Right now, things are very interesting because of the uncertainty of money around the world. Regarding these drops in value, I often talk to Yassine about them. In developing countries, anyone with an internet connection can now pretty much set up or buy an insurance policy in the form of Bitcoin. Going back to the purple line, it doesn't look anything like the volatility you see in monetary policy in the US and around the world, which is controlled by people. When the United States stopped using the gold standard and closed the gold window in 1971, monetary policy went completely crazy. It has stayed crazy ever since. Even though people have tried to control the inflationary effects, they go too far in both directions. We believe they are going too far on the downside at this time. This is the real Fed funds rate. There is a range of 5.5% to 5.5% for the Fed funds rate, and you can see that taking away 3% brings us to 2.5%. This line will move closer to 5% if inflation goes down as planned and the Fed doesn't cut rates. This could happen in November if they don't cut rates until inflation goes down. We haven't really seen that since the 1980s, when inflation was still thought to be embedded or likely to return to double digits. Today we're not like that at all. The Fed has kept interest rates higher for longer, which means the length of time from its last rate hike to its first rate cut. This slide on the next page shows that information. We're now above normal, as you can see. You can also see that the last 3 times this happened, we were higher than we are now. This was a sign of the global financial crisis of 2008 to 2009. That was 2006 to 2007. In 1997 and 1998, it was a sign of the tech and telecom bust. In 1969 and 1970, it was a sign of a slowdown. A quick word about money matters. The gap is clear. We say this every time, and we just want to stress that the opposite of this deficit, which is at 6.5% during a so-called expansion, has not really happened except after the crashes of 2008 and 2009 when stimulus was still flowing freely in reaction to them. But things aren't as bad now, and we still think growth will be the answer, just like it was in the 1990s. Most of the 1990s can be seen in the Clinton government. We got back to having a balance, which was due to the very good growth. That's all the important crypto news for today. Stay tuned for more news analysis and views from the world of cryptocurrencies. Tell us what you think in the space below. Please like this movie and subscribe to our channel to see more fun videos.